Private equity is one of the most sought-after careers in finance, and one of the hardest to break into. The pay is extraordinary, the work is intellectually demanding, and the career trajectory is steep. In this video, we break down exactly how PE recruiting works, what skills you need, and how to position yourself to land the job. Private equity firms are small. A typical mid-market PE firm with 2 to 3 billion in assets under management might employ only 30 to 50 people total. They are highly selective, hiring only the best analysts from investment banking and sometimes consulting. Competition is ferocious. The most common path into PE is 2 years as an investment banking analyst at a bulge bracket or elite boutique bank, Goldman Sachs, Morgan Stanley, JP Morgan, Evercore, Lazard, or similar, followed by a direct jump to a PE associate role. This path accounts for the majority of PE hires. Why banking? Because PE firms want analysts who already know how to build financial models, work on M&A transactions, manage deal processes, and operate in a demanding professional environment. 2 years of banking is boot camp. PE firms hire people who've already survived it. The PE recruiting timeline has become increasingly compressed. On-cycle recruiting, the process where top PE firms interview banking analysts for associate positions, now begins almost immediately after analysts start their banking jobs. Sometimes firms interview first-year analysts within their first 6 months. On-cycle recruiting is frantic. Firms release interview slots with little notice, sometimes 12 to 24 hours. If you miss the window, you miss the process. This is why preparation must begin before you even start your banking job. PE prep is a multi-month undertaking. Off-cycle recruiting is slower and more organic. Smaller PE firms, family offices, and growth equity funds don't follow the on-cycle calendar. They hire when they need people, often posting on LinkedIn or through headhunters. This creates opportunities for candidates who weren't placed in on-cycle. Headhunters, recruiting firms that specialize in placing PE candidates, are the gatekeepers of on-cycle recruiting. Firms like Amity Search, CPI, SG Partners, and Oxbridge place the majority of top PE associates. Building a relationship with the right headhunter early in your banking career is critical. To get on a headhunter's radar, you need the right profile, target school, strong GPA, bulge bracket or elite boutique bank, and ideally a sponsor coverage or M&A group. Headhunters sort candidates quickly, they want to place people who will get offers, because their fee depends on it. The PE interview process has 3 main components: fit questions, technical questions, and the LBO modeling test. You must excel at all 3. Weakness in any one area can disqualify you regardless of strength elsewhere. Fit questions assess your story, your interest in PE, and your ability to work in a small, high-intensity environment. Common questions include: walk me through your resume. Why PE? Why this firm? Tell me about a deal you worked on. What would you look for in an investment? Practice these until they're automatic. Your deal experience is your most powerful differentiator in fit interviews. PE interviewers want to hear how you contributed to live transactions, your role in the process, what you learned about the business, and how you think about it as an investment. Know your deals cold. Technical questions cover accounting, valuation, LBO mechanics, and financial modeling. You should be able to walk through the 3 financial statements, explain how a cash flow statement ties to the balance sheet, describe the key drivers of an LBO return, and calculate returns from a verbal LBO prompt. The paper LBO is a common screening tool. The interviewer gives you a scenario, a company with certain EBITDA, a purchase price, debt structure, and exit assumptions, and asks you to estimate the IRR mentally or on paper without a spreadsheet. You need to be able to do this in under 5 minutes. The full LBO modeling test is the most important technical hurdle. Firms provide a case study, often a real or fictional company's financials, and ask you to build a full LBO model in 2 to 4 hours, then present your findings and investment recommendation. This is where candidates are most frequently eliminated. To pass the modeling test, you need to build a complete LBO model from scratch: income statement, balance sheet, cash flow statement, debt schedule, returns analysis, and sensitivity tables. Speed matters. Accuracy matters more. Practice building models from blank Excel until you can do it confidently under time pressure. Resources for PE prep include the Wall Street Prep LBO course, Breaking into Wall Street, Macabacus templates, and targeted prep guides. Many candidates spend 60 to 100 hours preparing for PE interviews. Treat it like studying for a professional exam, structured, consistent, and rigorous. Beyond technical skills, PE firms want people with business judgment. Can you identify what makes a company a good investment? Can you spot risks others miss? Can you articulate a clear investment thesis? These higher-order skills separate good candidates from great ones. Firm fit matters enormously at small PE shops. You'll be working closely with the same 8 to 12 people for years. Interviewers want to know if they'd enjoy working with you on a cross-country flight or through a stressful due diligence process. Be authentic, intellectually curious, and genuinely enthusiastic. Research the firm before every interview. Know their portfolio companies. Understand their sector focus and investment criteria. Read their press releases, LinkedIn posts, and any public commentary from partners. Walk in knowing more about the firm than the interviewer expects. This signals seriousness. PE salaries are exceptional. Associates at top firms earn $150,000 to $250,000 in base salary plus bonus, for total cash compensation of $300,000 to $400,000 or more. At senior levels, partners can earn tens of millions per year through carried interest. The economic opportunity is real. But the lifestyle is demanding. PE associates work 60 to 80 hours per week during active deal periods. Weekends get consumed by due diligence. Travel to portfolio company sites, management presentations, and investor conferences is frequent. The work is rewarding but relentless. The MBA path is an alternative route for those who didn't come from banking. Top PE firms recruit post-MBA associates from M7 business schools, Harvard, Wharton, Stanford, Booth, Kellogg, Columbia, Sloan. These roles are fewer in number but equally competitive. Growth equity and venture capital are adjacent paths for those who prefer minority investing, faster-growing companies, or a less leverage-intensive environment. Growth equity roles at firms like General Atlantic, Summit Partners, or Vista Equity look for similar skills but with more emphasis on commercial analysis. After 2 to 3 years as a PE associate, the career paths diverge. Some associates are promoted to vice president and continue up the PE ladder. Others go to portfolio companies in operating roles. Some leave for hedge funds, family offices, or corporate development. The PE experience opens many doors. Making partner at a PE firm is a decade-long journey. You need to source deals, execute transactions successfully, generate strong returns, and build an internal reputation as a rainmaker. Most associates don't make partner at their entry firm, but the skills and network they build are incredibly valuable regardless. If you're earlier in your career, in college or grad school, focus on landing the right banking role first. Target M&A or sponsor coverage groups at top banks. Build your modeling skills obsessively. Study accounting and valuation deeply. The path to PE runs through banking, and the banking path runs through preparation. Networking is underrated in PE recruiting. Most PE firms are small and hire through relationships. Cold emailing partners and associates at PE firms, especially smaller ones, can create conversations that lead to opportunities. Be respectful of their time, have a specific ask, and follow up professionally. Even if you don't pursue PE full-time, understanding PE is essential for anyone in corporate finance, M&A advisory, or even corporate strategy. PE firms own thousands of companies. Their frameworks for value creation, capital allocation, and operational improvement are the gold standard in business. Private equity rewards the prepared. The technical skills, the deal experience, the relationships, and the business judgment, none of it comes quickly. But for those willing to put in the work, the intellectual challenge and financial reward of a PE career are genuinely extraordinary. Start preparing today.